Baba's come off the lows. I find myself considering begin peeling off near current levels, despite still believing the true value is much higher. Seems like an emotional flaw that I was hoping you could comment on. It's not an emotional flaw, it's a work flaw. So if you had done by the way, this is a great question. A lot of people are going to relate to this. So let me explain why you would have the view of selling at these levels. One, it's had a big run, so it's probably going to consolidate and it's probably going to pull back 5 or 10% or whatever. But you don't want to be out of it, because then it's going to run away from you, and then you're going to chase up, then it's going to pull back, and it's just going to chop you up, and it's going to go up 200%, and you're going to make 20% if you're lucky. Number two, how many of the annual reports have you read? That's number one. How many of the conference calls have you listened to? That's number two. How many of the bearish theses have you read to understand holes in your bullish case? How many suppliers have you talked to? How many competitors have you talked to? How much work have you done to know economic analysis of the financials, to know the sum of the parts analysis or the discounted cash flow on a normalized basis? And if the answer is none, then you probably should sell, because you don't know what you own, and then you're just guessing based on expert bias, which is deadly. I think that, if you're just following someone blindly into a stock, I put out a tweet from Peter Lynch this week, and he was talking about why people do so poorly in stocks that are not professionals. And, when they buy a new refrigerator, they read Consumer Reports, and they ask their friends and family, and they ask, go to 3 different stores and get a price. When they plan a vacation, they view all these reviews, and they talk to their friends and family and a travel agent and people who have been there, and they really do due diligence, and they make calls, and they look at prices. Then they go home and they hear a tip on a bus, and they put 50% of their life savings in it before they get home. And that's why they don't make any money, because they don't know what they own. They haven't done any research. And I think that's the number one reason why you would even consider selling at these levels at such a discount to intrinsic value, because you just haven't done the work to make yourself comfortable. And if you're just following someone blindly, you should just be out of the stock. It's generally good advice. So just, start with reading, maybe get out and read one full annual report, and then read another, and then listen to a few conference calls, and then try to do an analysis of what you think the business is worth. Then look at the earnings power and trajectory, and the revenue growth and the earnings growth and the cash flow growth and the return on capital over the last 10 years, and see if you think this was a temporary impairment or a permanent impairment. And if it was temporary, then what does that trend line look like 5 years out? And what would the business be worth at peak and trough multiples? And then you'll get more confidence to hold through with things.